First of all, I would like to say thank you to everyone who joined us today and watching this meetup. My name is Elena Obukhova. I'm founder and CEO of FS, FinTech Advisory Services, and MakeEvent, the platforms that you are using today to access this meetup. I'm also co-founder of CryptoTP. And being an entrepreneur myself, I learned the game from both sides, from startups and from investors' perspective. And what I realized that actually 70% of startups they're coming from personal connections. And that bring a lot of challenges and makes founders feeling frustrated because if they start from a very beginning and they're trying to look for investments and they don't have these connections, it makes it very difficult to actually even talk to investors. That's why FS decided to step in and try to close this gap between startups and investors and make sure that both parties can have an efficient communication and collaboration. And let's start diving into how to build a successful fundraising strategy. At the very beginning, I would like to discuss main fundraising options. And of course, you might be familiar with family, friends, and fools category. And that usually is the first one on the list of a founder when he or she is trying to find the funds to support the startup. And although this category will not give you a lot of funding, but it's something that can be very helpful to start your journey. The next category will be angel investors. In this category, you also shouldn't expect too much of funds being raised. Usually it can be around $50,000. But the main value that you can get from angel investors is that you can also have necessary connections. You can get great feedback. And if the angel investor is well connected in industry, he or she will be more than happy to help you with your journey and provide you with the funding that you need to take off with your startup. And this is usually for pre-seed stage. There are also incubators and accelerators where people are going for a mentorship. And this category of fundraising will help you to raise somewhere between 50,000 to 150,000. But it also will bring you a lot of mentorship feedback that you can get from these parties. The next will be a crowdfunding. If you go for a crowdfunding, it will be a little bit different story. I will cover benefits of crowdfunding a little bit later and tell you why is it so different. Then we can talk about VC, traditional and corporate. VC, like for traditional ones, I'm pretty sure that you're quite familiar with the type of VCs and how do they invest in startups. But it's important to mention the corporate VCs. In most of the cases, corporate VCs are looking for startups that can be like good complement for their existing technology or business. If you're eligible for any grants or competitions, I always recommend to go for it. It's a quite great experience because even you will not win there, maybe, you will still get a lot of feedback, a lot of valuable advice from jury, from other participants. You will also feel the market. You will see what are other solutions that are available on the market and what kind of startups can actually win. And in case that you are winning a grant or a competition, it's always a great addition for your pitch deck and for your current validation and traction that you will be discussing with investors later on. And since we're talking about blockchain startups, of course, our token offerings will be quite a popular fundraising option. And from company perspective, it will be quite similar with crowdfunding, and I will discuss it also a little bit later. So how to choose the right fundraising method? I personally like the approach when you choose a few important questions that you keep in mind to check what kind of things you need to get prepared, or what kind of things you should expect. And first of all, ask yourself, what do you want? It can be different resources, connections. It can be also mentorship that you can get, for example, from accelerators or VCs. It can be also their expertise. You might need to start already getting users or traction. So you need to understand what are those things that are really important for your business, and ask yourself, what do you need most? Select one most important option from this list, and think about how fast do you need it. For this question, you need to keep in mind like how long you can actually survive without getting this resource or this funding or the users that you need. How long can you survive with your business? And it brings us also to a question what you don't want from fundraising. And there can be different limitations, there can be different obstacles and risks that you can face with. And you need to clearly understand what is the least option you want for your business. It can be losing control, it can be waste of time that you spend to prepare for whether crowdfunding, or if you use it or to prepare for VC funds or different accelerators. So you need to clearly understand what is something you don't want. And of course, if we talk about VC investors, they're quite localized. If we talk about crowdfunding and token offerings, they can be quite globalized. So it's very important to understand where is your target audience, as well as where is your target investor. Of course, if, for example, your target audience is in US, then maybe it makes a lot of sense to go and reach out to US investors, because they can give you all necessary help that you might need at this step. And let's look at all the fundraising steps mentioned, and see the key takeaways and challenges. And first of all, I would like to mention the crowdfunding. And the key takeaway here will be the users. Because, Zahi, sorry, can I ask you to mute yourself?
Sorry.
So yeah, the first option will be crowdfunding, and the key takeaway will be users. The retail investors that will find your project interesting, they're not only the investors who are interested in their investment to grow, but they might be also the people who actually believe in your project and that actually will be using your project. That's why crowdfunding is a great option for also attracting new users. But there are some challenges. The preparation can take a while, and the competition is quite high at the crowdfunding platforms, because they have a lot of startups listed there. And in order to stand out from this list, you need to make sure that you have great marketing materials and clear value proposition. For angel investment, you can get great connections from your angel investors that we already discussed, and especially for the angel investor is well connected and has a great network in the industry, especially blockchain industry, then for sure you can get a lot of valuable connections from there. However, in most of the cases, their funding size will be relatively small. And sometimes the equity share can be slightly higher than what you can get at a VC fund or in accelerator. For VC funds, the main key takeaway will be resources. Big VC funds they always have quite a lot of portfolio companies. They also have alumni that can be very useful for your business in terms of connections, in terms of the feedback, in terms of different other resources that your business will need at the very beginning stage. However, it's quite challenging to approach VC investors, as they have high expectations. They will most likely require you to have already return, already have some market validation, already have the project at least launched and having like a first testings. And of course, you always can face with the risk of losing control later on. So it's very important to understand which investors you are talking to and what kind of terms are you agreeing to. For incubators and accelerators, there you can get a great mentorship. And accelerators usually, like their main goal is actually help companies with their resources and with their experience. So they provide you with a lot of mentorship that you will need at their beginning stage. However, you are given a short time frame in most of accelerators. During that time, you will be introduced to many other investors. And if you fail to fundraise during this time, you can be in a quite challenging situation afterwards. For grants or competitions, if you participate there, you can get great publicity. And as a drawback here, if you lose this kind of competition or you fail to get the grant, your team can be quite demotivated. But for this aspect, I always say that don't be like stressed out that much about it, because if you participate in a grant or a competition, you're not really losing anything. You can either gain the first place or the grant, or you can gain a lot of positive or maybe negative feedback. But all this feedback will be so useful for your business to make sure that you're ready for next fundraising rounds. Is, for example, with crowdfunding, you might only have one shot. If you fail, you fail. If you fail to win the competition, you still continue your journey, but you become stronger. And for token offerings, I also mentioned that the key takeaway will be similar with crowdfunding. There will be users for the same reason as the people who will be investing in you most likely believe in your solution and willing to try it out. So you kind of are getting two things at one time, investor and the user. But preparation and compliance can be quite challenging. And especially compliance, if you go with STO, you need to make sure that you comply with local regulators requirements where you're planning to conduct your STO. So make sure that you have everything in place. And this one might require additional funds inflow in order to prepare all the marketing materials, and also strongly recommend to have already working product so your potential retail investors can actually try out your solution or product. So why do great projects fail to fundraise? And first of all, there is no market validation. And investors paying a lot of attention to market validation, to traction, because they want to know that your project not only like solving some theoretical problem, but it actually solving the real problems that users are willing to pay for. And if they see that you already have, let's say, like 1,000 of subscribers and everyone enjoys so much using your platform or whatever product you have, then of course you have a really straightforward message, and you can say that there are people waiting for the solution, and you have already the market validated. Investors also pay attention to financial projections, but in a different way. They don't really care how well you're going to forecast the future, because everyone knows that you can't really predict your end numbers. But what is the most important is actually understand how you're structuring this information. If you did the market research, if you analyzed your competitors, if you use the right benchmarks, if you actually have already a business model all settled, and you understand what will be your revenue streams, what will be your potential costs, how many employees you need to hire, and many other additional aspects that should be included there. So the more extensive your financial statements are, the more chances for you to actually have a better conversation with potential investors. And of course, value proposition. Investors getting like thousands of different applications, especially if we're talking about top tier VC funds. They for sure getting thousands of applicants. Some VCs are getting less, but even though even you're getting like 50 applicants per month, you will always pay a lot of attention to initial email or initial reach that the founder is doing. And if investor doesn't see a clear value proposition, what you're actually trying to do, and that can be also very harmful for crowdfunding. If you don't really pitch well to your target investor, if you don't really explain well what you're actually trying to do and why you are better than competitors, then of course you have less chance to actually be noticed and get the funding. Team. Most of our VC investors believe the team is around 50%. Some believe even more, like 50 or more percent of our success of startup. And that's why investors will always do the screening and look if your team is actually eligible, if your team can actually build what you are saying you are going to build. That's why I make sure that your co-founders have enough expertise in the field and they actually motivated and can bring this business further. And no matter how good and excellent your project is, if you're pitching to a wrong investor, there's not going to be any outcome here. And for this reason, let's actually discuss how to know your investor. There are many resources available online, like Crunchbase, or you can even visit investors' websites and just look for their investment focus. If you're a blockchain startup, just make sure that they invest in blockchain and that they actually understand your technology. But apart from that, also double check that they invest in your business model. Even if we split into basic aspects, B2C and B2B, investors that only invest in B2C most likely not consider B2B startups. So make sure that you're actually approaching the right investor here. And also a good way to actually look at their portfolio companies or previous deals to see what kind of projects they already funded and how many chances you have with this investor. You can also reach out directly to the decision maker, whether it's through LinkedIn, through email, because this person who will make the decision after all. And if you're not talking to the decision maker, the process can be quite longer. And you also need to understand what kind of aspects investors care about. There can be different key metrics, it can be a different approach that investors using. You can also ask some alumni or portfolio companies. They can share some advice with you for sure. You'll be surprised that people are quite responsive and happy to share the feedback, especially if they're already on board and they went through this process that you are going through. And be honest with yourself. Always try to understand how many chances you have with this particular investor or with your crowdfunding campaign. Because if you feel that there are not that much of opportunities here, then maybe it makes a lot of sense to start approaching those with who you have better chances, and then move to investors with who you have less chances. So I already mentioned that there are some metrics that investors want to see and that they're paying attention to. And two things that you need to keep in mind is runway and burn rate. These two aspects not only is that important for investors, but they also very important for you, because money gonna be finished at exact same time, no matter what you're putting on paper. So you need to make sure how many months or maybe a year, how long time do you have till you will run out of money, and how much of funding do you actually need to raise before that. The other thing, it will be the three circles that you have to put in your pitch deck, and the numbers that you will have to remember. And the first will be total available market. There will be serviceable available market, and there will be serviceable obtainable market. So these three numbers you need to remember before, you need to remember for your conversation with investors, and you have to calculate them beforehand. Let's look now at four common business models for blockchain startups. And I selected SaaS, subscription, transactional, and marketplaces. So for all these four business models, it's important to keep in mind pipeline and user base, customer acquisition cost of paid users. Paid users always preferable metric, and user retention rate. For SaaS and subscription models, you also need to keep in mind monthly recurring revenue. For SaaS, you need to keep in mind average recurring revenue and gross MRR churn. For subscription, you need additionally to calculate gross user churn and return on user. And for transactional and marketplace, you will need to calculate your net profit. And for transactional will be gross volume in addition to net profit. And for marketplace, it will be net profit growth rate in addition to the net profit. And moving closer to the end, I would like also to share some fundraising stats with you. And first of all, the average time to fundraise for traditional VC, it will be 6 months. For optimal number of slides, you should go with 10, 15 to make sure that you keep your information in short and more clear way for investors. In terms of fundraising amounts, for VC, during the seed stage, we observed the median of 750,000 and average of 1.5 million US dollars. And for coin offerings, of course, based on all the available data with disclosed fundraising amount, there were 10 million for median and 40 million for average. If we look quickly at the blockchain investment at glance, we also can see that there were 375 pre-seed investments with advanced blockchain leading by fundraised amount in this list. For seed, we will see 1,481 startup who raised their seed round with Darya leading in the list by fundraising amount. And Neo was leading the list of Series A startups that had like 350 in total disclosed. And Hyperchain is a Chinese startup that was leading in Series B round among other blockchain companies. For coin offerings, the biggest was Block One. It's a company that developed EOS, and the recent ones, there were Ava Labs and Republic. And if you want to have a better understanding in terms of popular locations, I can give some interesting numbers on 3 countries. First is Hong Kong, that has the largest number of fundraised token offerings. There was Estonia with the biggest number of token offerings, and US with the largest number of STOs. So this can give you some benchmark in terms of locations that you need to choose for your fundraising campaign or for your just normal for your fundraising campaign in terms of token offerings. And for VC, you will have to do some homework. And I hope that was available content, and I hope I provided sufficient information on how to get prepared for fundraising.